Well, good morning, good afternoon, good evening, wherever you are in the world. This is Patience Rose, and we're here live on Red Worldwide Co-working Live. And so we are excited that you joined with us today. We are happy to have some in-studio members and volunteers and contractors and all kinds of people in the room. We are also excited that those of you who join us live on YouTube because you've signed up and you've subscribed, and so for that reason you get a chance to know when we're going live and you can hop on. I'm excited today because you're going to talk about a couple things, and I think that it's really important for people to have access to some really good tools. This is really a part of our Smarter Start boot camp, and a lot of people, when they're just starting, one of the issues that they really get bogged down with is taxes. First year taxes. How do you handle that? And today is the day for most of the people who weren't necessarily supposed to file on March 15th to be filing. So you have specific types of structures that also file on April 15th. So let's talk about who those might be. Some people who have pass-through entities that have a fiscal year that ends in a month that will allow this to be their fourth month from the beginning of the year. Uh, for them, the beginning of their fiscal year, they would be responsible to file by April 15th. Other people who are sole proprietors, they are also filing by April 15th. People who have trusts, whether it's a business trust or a family trust, any type of irrevocable trust that is not a charitable remainder trust. Um, well, let me take that back. Even charitable remainder trusts need to file today, but they would file a different form, unless there is a different date, with regards to fiscal years and things of that nature. So let's talk about these years. If you are on a calendar year where your year ends on December 31st, okay, then your clock date starts on January 1. So that means that you're going to calculate months by the first month being January, second month being February, third month being March. And some entities are responsible to file by March 15 if their calendar year ends in December. So there were a lot of you that we did a tax day that we talked about. I've done a couple of webinars. We've posted those where we talked about what it is that you could do if you're in a situation where you needed to file and you were not ready to file. And so we posted the forms that would be necessary for you to extend your taxes if you needed that particular day. So you should go back and watch that episode. It's going to be labeled properly, that you would know that it's regarding taxes, and we give deadlines and we give forms, and we talk about you not being in fear, but please go ahead and file. So that's really important. But the other thing is that there's some of you who have different times of the year that your fiscal year ends, and so for that you have to calculate. Okay, so you're going to count. So depending on what state you're in, state specific rules are state specific rules, and so we're not going to talk about any state specific rules. We'll just talk about the fact that you need to check in your state with your Department of Taxation, whether it's California with the Franchise Tax Board, or Texas with the Comptroller's Office, or the Department of Taxation in Florida. All of those particular states that are in the United States have some very specific rules and ways that they want you to report, and the dates may be different than what the federal government states are. But if you are in the United States of America and you are dealing, of course, with the Internal Revenue Service, you need to be aware that there are dates that are hard and fast dates. And so April 15th for individuals is a hard and fast date. And if you are a pass-through entity and you're filing your taxes, you need to be aware of the dates, and please keep up with that. Now, If you have the situation where you're not ready to file, there might be special reasons why you're not ready to file, and you need to do an extension. There are ways for you to do a paper extension and just put it in the mail, postmark, of course, with this today's date would be great, because that way the IRS is able to see when you mailed it. Okay. It's really important that you know that you're probably going to be okay if you're mailing it from your home on the on today's date, because they do, it's not necessarily wiggle room, but they do calculate and say, okay, well, if they got to us on this day, it was probably mailed by the 15th of April. In our tax procedures class, we talk about that and how the IRS calculates time for the mailings. But I just like to tell people, try to get it to the post office so you can get a postmark date, because that does really help in justifying situations when you're able to say, hey, I did mail it on time, see, here's my proof. Now the other thing is, when you're looking at options for filing, this is not something, and I'm sure there's a lot of different YouTube videos out there, with regards to this. I'm going to look for, let me just grab a window, but there are places where you can file your taxes for free. And some of them I have used when working with clients. Some of them are really good. And some of them are better, than others. So the IRS has an IRS free file, and there are a lot of people that don't know that. And the program is offered by the IRS, and it provides free federal filing for individuals with an adjusted gross income of $79,000 or less. Okay, so that's really important to know, that you can actually go to the IRS's website, and you'll be allowed to use the guided tax preparation software or the free file fillable forms. Now, I want to show you this because I think it's really important to see, where you could make these types of things. So I'm going to share my screen. Happen every day if you need to do this. So there's a website called myfreetaxes.com. File your taxes for free. Get the assistance you need. Seriously, that's what they tout on their website. And you could click on file my own taxes or have my taxes prepared for me, and here are the file my own taxes options under $79,000, filing years 2023. It's only going to take you less than an hour to put the information in. And basically, if you have all of this information ready, okay, and then they have a full list that you can click on, then you could very well, file your own, taxes by just putting in this information. If your taxes are simple and you don't have, anything more than self-employment income, and your W-2s, this is a good way to go. You're not complex and you're not needing to itemize a bunch of things. This is, this works for you. If you need to have your taxes prepared for you for free and you're under $60,000, they will file anything from 20 to 23, and the time to file is 2 to 3 weeks. So we kind of passed that, but for people who might be in the situation next year, this might be a good option for you. And, if there is some self-employment income and it's limited, they will, there's limited services that they can offer you there. But for the most part, this is a really good option for most people who need to have their taxes filed for free, or they need to file them themselves. Another free option is Credit Karma. Okay. And Credit Karma is really good in that, if you are already utilizing some of their other services, this might be a good way to go. So Credit Karma is owned by Intuit, and we are Intuit users, and our other company, Precision Tax Advisors, Precision Tax Advantage, and Precision Financial, which is under the auspices of Precision Management Group, we are working with Intuit softwares. And so we utilize QuickBooks, their Credit Karma software, as well as we, are letting people know about the TurboTax if they choose to go that route. But if they want to file for free, they can file for free using Credit Karma. And Credit Karma is a really good option for people who are, new in business and they really want to, have a software that they can use, that they can file themselves, and they can, have access to their tax documents all year long. So what I like about it is that inside of the software, it makes available to you your previous year's filings. It also, there's some limited guidance in the software, which is great. It's not a tax advisor, okay, but there's just limited information in there that kind of will guide you along the process of filing. And because it's really TurboTax, with just a few added, specialties for people who are filing themselves, who, might be also in the Credit Karma ecosystem, it really does have a lot of the same processes inside of it as TurboTax. Okay. Then, of course, hold on, there's Tax Free USA, which I have used also, or Free Tax. I'm sorry, not tax free, Free Tax USA. So let's go there. This is a free federal return for everyone. The state-specific returns are $14.99. But what I like about their product, which I've worked with clients who wanted to file their own taxes, and helping them to make sure that they were able to know what they were doing and walking them through utilizing all of the parts in the software that could help them make sure that they had everything they needed. This software has the free edition. You can upgrade to a deluxe edition that gives you, more support. You have, the priority support in the deluxe edition. You have all of the live chat and unlimited amended return. So if you need to amend your return for $7.99, you can get access to this particular set of information. But for pro support, you get the $49.99. You get all of their live screen share to show and ask questions and get personal tax advice. There's lots of guided help here. So if you're going to be a DIYer, this would be what I would suggest, because I have had great success with Free Tax USA, with helping clients who needed, to file themselves, and didn't necessarily want to come out, with a lot of capital outlay. Now, audit defense, I love this because basically, if you're audited, okay, you can sign into your account when you pay for this particular software. If you're doing federal, okay, it's $0. In state, it's $14.99. You have the ability to add on top of it the audit defense for $19.99, which is $1 million in audit defense. They will represent you. They will assist you with all of the things that you'll need it. You can contact an audit expert, and they handle every step, everything that you would need if you're audited. So this is a very good way to go. If you run into a situation where you feel like you have a more complex scenario with your taxes and you might be at risk for something triggering an audit, this would be what I would suggest. Okay. All right. So any questions about these? Okay, so I just learned something new. They do have a file a free extension now, get a free federal return later. for $0, which is kind of cool because that gives you the ability to not have to pay the extension fees that are embedded in some of the other softwares. I know inside of QuickBooks, in the Pro Connect, the extensions are free, but you have to pay for the return upfront, and so it ends up being whatever the cost of the return is, and then you can actually not have to pay for the return. When you go to file the return, you pay up front for the return, and then you can file your extension. And so we've done that with clients, and with some of our people who are members. We'll file their extension for them, but they have to pay the fee for the return up front. But Free Tax USA, if you're doing it yourself, this is absolutely the best way to go. Okay. Now, we've done prior years with Free Tax USA. Federal is still going to be $0, and they go all the way back to 2016. So for some people who, for whatever reason, did not file, here you go. Okay. You have an opportunity to not have to concern yourself with, the pricing for paying those prior years, okay? Unless it's for the state return. All right, so we'll stop sharing there. Let's talk a little bit about some of the things that people might also be thinking about while they're looking at filing. We'll take the last few minutes to, really talk about things that are a challenge. Make sure that when you're filing and you are gathering all of your information, that you do take the time to see if you qualify for very specific things that are available, right now. A lot of people don't realize that when they change out all of their all of their lighting to LED lighting, that there is an energy credit federally that they can get, and sometimes even from their state. When they, of course, when they get solar, most people know that there's an energy credit that goes along with solar. One of our clients was able to get like $6,800 on that energy credit, and that is not even in combination with the rebate that may be available, in your state or even federally through the Department of Energy. And so you want to look at those things when you're maybe changing out, the solar, changing out windows. That's another place where they allow you to gain access to the energy credits that use the tax write-off. Some other things you might want to think about are refrigerators and other appliances. When you're changing air conditioning systems, there are some specific types of air conditioning and heating systems that could bring an energy credit. So, paying attention to those things are really important while it lasts, okay, for you to be able to get the energy credit, because it could be a considerable amount of money that you're able to get back for participating in making the carbon footprint what the country believes that it needs to be. So, go ahead and take a look at, some of those things that you might have done. All you'll need really on some of it is some of the solar credits, you're going to have the information that's on your receipt regarding the panels, because they want you to put information about the panels in there, for certain rebates and things. But for the energy credit itself, if you just have your receipt and the amount that was spent, and you are able to plug in because they're going to ask for some specific amounts to be plugged in there. If you have the receipt, all those amounts are on the receipt. So you'll be able to do that from your, main invoice or main receipt that you received from the company who installed your solar, or the company that you paid to, not necessarily the installation company, but the company that you paid for the solar. Okay, so some of the other things that you might want to think about that a lot of people are not necessarily taking advantage of. Yes, I see that, Crystal. Yes, I would make sure it's sent certified mail. Yes, yes, and yes. Okay, so let's go back. three things that I want to make sure you know when you're filing your taxes and you are not e-filing. If you are mailing taxes, please, please, please do not put more than one set of taxes in an envelope and send it off. We know that it's just you. You might be the one person that have all the trust, and you might have, companies or whatever. But if these are standalone entities that you're filing taxes for, and they're not on your personal taxes with you, then they need to be in a separate envelope. Okay. And the reason for that is that things get easily moved around at the IRS, when they're opening the envelopes and that one envelope has, one coupon in there for one, form in there for the extension, then they process that one. And there's generally, no chances for that to be mistaken. But sometimes people have had taxes have been lost, and yes, they get found most of the time, but you don't want to be in that situation. So it's best if you put one thing per envelope, when you're sending it off, so that way they can associate that with just one company. That's a good practice. It's not a rule, it's just a practice. And then the other thing is sending it certified mail. That's number two. It will really help you, because when something happens where the IRS can't find something and you have the certified mail to prove that it was sent, then that causes them to do a little bit deeper dive when they're looking. We have one member who had a situation that a tax professional did not properly handle things and did not file, and she had to file. And because she was able to prove that she had literally just filed, they were able to go in and see that she was telling the truth, that she had literally filed it herself on a specific date, because they didn't file. And it did help to make sure that she didn't have to pay a penalty. So paying attention to just following those couple of things for a rule of thumb is really important. Then the other thing is, please make sure you're using the right file for the right purpose. There are several different extensions that people can get in their state, and also federally. There's two separate kinds of forms, but the 58 form, of course, is for, individuals. And we want to make sure that we're filing the right forms at the right time. So, if you know that you're needing to file and you are not a business, the 48, hold on, let me just pull, because we did this, and it's already on our website telling people what forms they need to file. But I want to, just give you some links. So we'll throw these links up in the chat for people who are needing them, and then that way they have access to that. But we just want to make sure that you have access. So the let's grab, there is a 2924 form, and this is, I believe, is for California. So let me see. That's a reasonable cause form. If you're needing to explain why you didn't file on time, and ask for some sort of forgiveness, and or what we call abatements, to make sure that you're not having to pay penalties, that's going to be the form that you would file for that purpose. And we'll put that in the chat in a few minutes. There is a form 3537. They have these different forms in most states, which is a payment of automatic extensions for LLCs, people that filed after the date. And that they're going to ask for assistance. But people who are just doing an extension and they know that they're going to need to pay the $800 in California, that's the form they would file. In other states, it may be a different form. I'm only covering California because we have a lot of members in California, and so I'm just mentioning that. But in other states that have state tax, they have a different form number, but it serves the same purpose. In California, the limited liability company return of income is the 568 form. Okay. And so this is the form that a person who has an LLC in California would file. In other states, they may have a different form, but just know that using the right form is going to be important. People that don't know what form is the right form, you can go to your state's Department of Taxation's website and put in the type of entity you have. And most often they're going to give you what the form number is. Now, what I'm looking for here is the form for businesses federally is the 7004 form. It covers most entities, and I just want to pull that up so you guys can see what it looks like. And I'm going to share my screen. And so for some people who were on yesterday with me, you got a chance to see this form because we actually walked through and filled a bunch of them out. But if you weren't in that session with us, it was a working session. And then we had a couple of people that we did it one-on-one. This is the form, okay, for federal. And make sure that you're using the most recent one of these, which is December 2018. And you're just going to go through and you're going to put your business name here, your EIN number here where it says identifying number, the street address, city, town, and zip code. And then you're going to go down here and find the code for the type of form that you are going to be filing when you do file your taxes. So if you are an LLC, that is not an S Corp, that is going to be the 1120 form, okay? Unless you're filing as a corporation, and that's going to be 1120C, and you'll find this little code here, 12 or 34, and you'll put it up in the box under part 1, number 1, right? If you're a trust, then that's going to be 05, okay? And you'll put it in here as well. If you, depending on the type of trust you are, there's there's 5 different types of forms that you would fill out, and depending on the reason why you're filing. So if you're a bankruptcy estate, then that's going to be a 03 form. If you're an estate other than a bankruptcy estate, meaning that a person's living trust has now turned into an estate, or they because they passed away, then that's going to be a 04. That's an example of why a person might fill out this particular estate 1041 form for the purpose of being a state. The 1041 as a trust is going to be 05, 1041N is going to be 06, and 1041 QFT is going to be 07. So, just make sure you're filling out the right form. And if you have questions, there is an instruction sheet that goes with this on the IRS's website. So go look at the instruction sheet because it explains every one of these forms. It explains every one of the areas on the form what you should put. Another place where people get kind of caught up is on 5A. The application is for calendar year 2023 or tax year beginning, and please place your tax year. If you are a fiscal year person, then you might put in here the information, because if your fiscal year begins in June, there's no way for the IRS to know that unless it's on this form. If it's a short tax year, okay, meaning that you're just starting and you're brand new, maybe your year started in the middle of the year, July 17, 2023. And of course, it ended December 31st, 2023. Make sure you check initial return. If you're closing your entity, and this is a final return, make sure you put the right dates on here. It might have, you might have started the year January 1, 2023, and you closed your business June 30, 2023. So put that here and here, and then click final return, because that way the IRS knows, what they're looking at when they see the income and the assets and everything, being what it is are on your on the actual return when it comes in. Now, in this particular case, the extension to file is not an extension to pay. So that means that if you know what the tentative total tax is, you might put that here. Okay, that would be a really good thing. And then the total payments and credits, if you already prepaid, you might put that here, right? And then if there's a balance that's going to be due, you put that there and you write a check. Okay, now you do not have to send the check in the same envelope. Maybe you're paying, with a card online, or maybe you are sending the check within the week or something like that, but you needed to get this extension out. That is acceptable, okay, to the IRS for you to separate the two things. But what is not acceptable is for you to file this extension to file late, because you're going to end up with a penalty. So I'm just saying, do make sure you file the form. Okay. Um, for a business, this is really, really important that you file the form, because the penalties can be quite high, and they can go up to as much as 75% of what your tax is, so you don't want that. You want to make sure that you are in a position, where you are filing properly. Okay. Well, we have, kind of covered just some basic things today, to keep people kind of in a position where they are comfortable with, what it is that they need to do on today, the 15th. If you're filing your taxes, use some of the resources that we talked about. If you need to have the ability to not pay someone to do the taxes, and you feel comfortable, that it's not a complex situation, and, you can utilize those services are available to you. All right. Well, this has been Red Worldwide with Co-working Live, and we will see you again next time.